Snipers, you have to see what's happening to the Bitcoin price this Monday as we have broken the $44,800 resistance level, now playing inside of a range that has a target of $49,700. I want to talk about Bitcoin reaching this upside target, but now that we're above this 200-day moving average and the 20-week moving average, we can start talking about what it would look like for Bitcoin to see a extremely successful rescue operation that could potentially lead us towards new all-time highs towards the end of this year. And the reason I'm saying this now is because we are above the 20-week moving average, which is home base. And when you're above the 20-week moving average, anything can happen. Notice how when we started to bounce on this 20-week moving average in September of 2020, when Bitcoin was at $10,000, we stayed above the 20-week moving average, bringing Bitcoin to the $64,000 level. Are we going to see the continuation of this? That's going to be the primary topic today, but I will be addressing the bears because I'm going to talk to both audiences on this channel. And if we get the rug pulled on us, what are the major support levels for us to watch in order to say, okay, this is it. We're potentially going to just see this get rug pulled to see new lows for the year. I'm going to talk about that. I mean, the bears are important here, but it's exciting to see Bitcoin above the 20-week moving average and the 200-day moving average. The curtains are not red anymore. They could turn red again, and that could all be determined this week, depending on how price action moves. We're also going to take a look at Ethereum. Still having this cup of coffee, not seeing as much strength as we saw over the last few weeks, but we're above 65,000 Satoshis, so altcoins are still in a very bullish trend, being the leading indicator here for others' dominance. And we look at Bitcoin dominance still rejecting the 20-week moving average. This is a major puzzle piece, but if we get above this 20-week moving average, this could change things. So there are a lot of things we're going to talk about today. We'll also look at traditional markets, of course, because it's Monday. The DXY is pushing up. This is a puzzle piece to talk about for those that are bears, I guess you can say, because with the DXY pushing up, that's actually not a good thing for other markets. The S&P 500 has yet to react to that, but U.S. oil certainly has, along with gold. And so that could start to translate into other markets. But Bitcoin's above the 20-week moving average. So now we can actually talk about what it would look like to see this rescue operation successful. We'll also cover the total market cap chart at the end of this video. You guys are watching the Snipers channel on a Monday. Remember to smash the like button for the YouTube algorithm so we can hit 100,000 subscribers on this channel. So just like we predicted, Bitcoin had this cup of coffee yesterday at 44,800. And I said this was an indicator to me as an umpire that we were most likely going to see this break to the upside. And that's why we got above 44,800 now. You can see we've already tested it here on the 4-hour chart. And I talked about my final line in the sand yesterday being the $42,000 level, really the 41,950 to be exact. And I still want to keep my line in the sand at this level because understand that we have the monthly open here. Yes, the weekly open is just above this at 43,800 with the monthly open at 41,500. But if we come down at any point to test this weekly open and get below it, I'm not going to be too concerned inside of this pocket between the weekly open and monthly open. So I still want to have my line in the sand at 41,900 when it comes to understanding the fact that this is either a relief rally or a reversal. And if it's a relief rally, my last draw is going to be this $41,950 level. But if we stay above 42,000 and 41,950 this week, especially if we see the continued strength right now to the upside, because we are heading towards 49,700 at this point. If we don't see sell pressure come in, this is the next upside target. Do I believe we're going to see price action above this level? That could be a possibility, but what I really would like to see is this. If we want to assume this successful reversal in trend on a more macro scale, being above the 20-week moving average, we can talk about that. We know the 20-week moving average is below 44,800. And so the 20-week moving average actually is sitting right now at 43,300. So it's actually gotten itself even below that. So what I would like to see is Bitcoin coming up to 49,700. And then if we see it slow down, I just don't want to see us break below 44,800 after we test 49,700. Because if that's the case, Now we put ourselves above the 200-day and 20-week moving average. We see a garden variety retest, and then we could potentially start talking about new all-time highs towards the end of this year for Bitcoin. If we see this just rally from here, I would be very surprised. I don't think above 49,700 we just rally out. Now, here's the thing though. What is the potential bearish scenario here? Well, if this is just a relief rally and we see the rug get pulled, at this point, is it smart to long in this range? I wouldn't say that's the case. Of course, for those that have been tuned to the Cypress channel, we took tons of positions for Bitcoin, Ethereum, altcoins during the May to July push to the downside. But since we've started seeing the momentum bring us towards these higher levels where the risk is a lot higher, we've slowed down on the swing trades. We've increased our day trades. And that's kind of how you have to play the market in a transitionary phase. In a consolidation, it's the best time to determine those more larger scale spot positions. But during these, these run-ups to the top here, sorry, Zoom just pulled itself up. I'm getting excited on this chart. During these like pushes to the upside, those are really where day traders are most benefited because of the consistent price action. And so for the downside, as I've talked about, 41,950, I don't want to see this level get breached. We have the 100-day moving average below it. We have the 50-day moving average below it. But because we're above the 200-day, I just don't want us to see us get too close to this monthly open anymore. If we start to break 42,000, we could see a lot of sell pressure come in. We don't know. This was a strong move to the upside. So if we see sell pressure come in and we break this level at 41,950, I think that there's still a potential that C wave that we talked about 2 days ago could happen where Bitcoin does see further lows for this year. And I have to put this scenario on the table regardless of the fact that these currents have changed just because of what's happening to the DXY, and then we'll look at other revolving parts. But this is my line in the sand, and I think that that's a fair place to put it at 42,000. It gives us a lot of room to be more confident in exiting a position at this level because we've had so much profits already. And so it's been very nice to ride this move to the upside. I just don't want to see 42,000 break at the monthly open at this point. So that's what I'm watching. If it doesn't break, then this preferred scenario is we come up to 49,700 so that we can at least see some cool down here. We get to test 44,800 as a support now that we broke it as resistance. That's really what I'd like to see for the most healthy reversal in trend that could possibly be on the table. So we look at altcoins. I do believe that we're going to see outperformance here with altcoins just based on how Ethereum has acted over the last few weeks. Just because we're seeing it slow down today doesn't mean anything. It's still extremely strong here. Heading towards 34.54, I think this is very likely at this point here to see Ethereum see some upside, especially with this move for Bitcoin above 44,800. So expect Ethereum to move up. Expect this 86,000 Satoshi level to come into the equation as long as we stay above 65,000 Satoshis. And I just got to put it like that, right? So is it time to get into spot positions for Ethereum? I don't know. We got our positions in when we had those very nice entries at 1770, 1760. So, getting positions in while the risk is this much higher, I don't know if that's the best case scenario after what we've seen over the last few months. And so the total market cap, though, I do really like what I'm seeing here. We're above the 20-week moving average. They're already acting as a support above 1.78 trillion, which is also a major resistance. We could just see a massive push to 2.259 trillion total and then see even new all-time highs for the total cryptocurrency market. And this would translate more into altcoins than it would into Bitcoin if Bitcoin dominance does not get above the 20-week moving average. So we're going to look at Bitcoin dominance, but if we see this push back down, I'm not concerned as well because now we have so much cushion here to see sideways price action that it's going to be fun to trade altcoins during a sideways move for the total market cap chart. But even if it goes further up, that's even more exciting. And really what I'm going to be monitoring here is this others dominance and Bitcoin dominance specifically. With others dominance tightening between the 50-day and the 200-day moving average, this could either push up or push down. And a lot of this is going to have to do with what Bitcoin dominance does. And so on the weekly chart, we are coming back to this 20-week moving average. We need to monitor this for a potential reversal in trend. If this breaks above, then it could be wise to look at Bitcoin over altcoins in the next few weeks, that's all going to be determined on this chart. And I want to pull up the gold to Bitcoin chart before we get into the traditional markets. Look how crazy this is. When the gold to Bitcoin chart broke down from its 2017 lows here, notice how this was in 2017 where the value of gold to Bitcoin found its bottom, and this was the bull market of 2020 and 2021 for Bitcoin. And then we saw when this broke up, this was the top for Bitcoin here at the end of April, start of May, where the gold to Bitcoin chart moved above the 50-day moving average. That's how we called the top on this channel. And then we came up, formed this ascending triangle, almost like a cup and handle, and now we're breaking down. This is very nice to see. For Bitcoin's confidence as a storage of value against gold, this is good. So I wanted to just show you guys that because we've monitored this for a long time, and now we're getting a confirmation that we're breaking down. But here is why I am still concerned, and I do have to talk to the bears on this channel. The DXY is pushing above 92.62 right now. It looks like it wants to head towards 93.82. Yes, we're seeing upside in the crypto market, but we understand the macro correlation between the DXY and the cryptocurrency market is inverse. So the short-term price action is determined by traders, but the macro trend is determined by institutions, and this is really what matters. So why I want to point this out is when the DXY bottomed out in January of 2018, this was the end of the bull market for crypto. This is when Bitcoin hit 20,000 in 2018, and then the DXY pushed up, right? So there's an inverse correlation here. You can see in 2018, when that happened, Bitcoin came down, right? So we have to monitor this and not keep the short-term traders in mind and really look at the macro here and realize that we're at the same area for the DXY's value where we topped out in 2018, and we've already seen this double bottom formation. We're above the 20-week and 50-week moving average, so we've already seen a reversal in trend here. And so this pushing up further, that could be the last straw for the crypto market. What if this is just the last relief rally? It's on the table, you know? So I'm just going to put it on the table like that. And then we look at the effects of this already on U.S. oil and gold, but it hasn't happened to the S&P 500. So that's what we want to monitor. When is the effect going to take place in the S&P 500? It doesn't look like it wants to. The S&P looks really strong. But remember, the short-term price action is determined by traders. The macro patterns are determined by institutions. And with that being said, I appreciate each and every one of you snipers tuned into their channel. If you guys want to win Principles by Ray Dalio, comment below and you'll have a chance to win. It's one of my favorite books on value investing. Let's see. We'll pick a winner from our video yesterday. Ramona Mason says, just needed to say thank you so much. Send me a message on Instagram. You won Principles by Ray Dalio. And I couldn't do this without you, snipers. I appreciate each and every one of you tuned into the channel. I hope you enjoyed today's analysis, and I'm really excited to see if this is going to be the true rescue operation that's going to be successful for Bitcoin to potentially get us back into this extremely bullish rally. That's going to be determined here in the next few days, into the next few weeks, and it's going to be exciting for those that are tuned into the channel. With that, thank you all for tuning in today. Until next time, snipers